Very active secondary market for fixed income so far this week. At the Treasury's window, I'm sure we've done close to ₦1 trillion in terms of trading via the FMDQ Securities Exchange PLC platform. So let's put some of this into perspectives and giving us a sneak preview into what happens next week. Bankole Odusanya, who is the head of fixed income dealing at UBA, one of the commercial banks on Broad Street, is live to us from FMDQ Exchange Place. Bankole, good morning. Welcome to the show.
Good morning, Boston.
A very big week. We've done more than ₦1 trillion this week in total, isn't it?
Yes, sir.
Yeah,
what has happened?
So what happened? What spiked the market?
Yeah, this month has been quiet from the OMO issuance end, so we've not seen intervention from the central bank by way of issuing OMO bills. Very reminiscent of what happened in April, where system liquidity was tight and average system liquidity has remained at 200 billion, a level where they're comfortable to leave the naira to play out and the markets to play out. So most demands from maturities from primary bills and OMO issuances that matured have come to the secondary market. Most others were filled at the secondary market at 11%, especially on the 1 year, we traded at 11.5%. This particular bill dropped to 12.02 on the NTB auction last week. And this week, on Thursday, there was no OMO issuance again, so rates fell further. The last OMO we had this month was on June 3rd and June 6th. In April, it was just 3 OMOs, and then in May, we had more than that. Going into next week, you would expect further allocations to come in, and then bond maturities to help ameliorate the tightness that we have seen. But basically, the action that we saw in the secondary market was because we didn't have intervention back end, and the most demand had to be filled in the secondary market, basically.
Yes, so the demand at the secondary market, that's where I saw 15.36 discount high for treasuries maturing February next year. 15%, Bankole. It's a happy time for you folks.
Oh, yeah. I'll just like to take it up from what happened in the bond auction. We had the bond auction this week, the one for the month, last one for the quarter. We saw 20 basis point increase across the maturities 2020, 2029, and then the 2049, which stopped at 14.68 from 14.48, and then 14.5 for the 2029. What has happened there is that we've seen reduced appetite at these levels because, like I said, we're not sure if the government will be borrowing more. We're not sure if they'll issue more promissory notes. We're not sure if they'll be doing more of external borrowing by way of raising more euro bonds. Clarity will come in next month when the ministers are being put out, and then we hear from the Minister of Finance what their agenda is on fiscal policy, revenue mobilization, how much expenditure they are going to push out, and how much of that difference, the gap, funding gap, will be sought from the local markets. So basically, it helps direction. We've seen some quiet on the bond market, except for what we've seen in the last 2-3 days, pre and post bond auction. You know, this has been the pattern in the last 3 months where pre and post auction we see some activity, but all month there's more activity on the T-bills end because it's short term. You know, just managing your liquidities and then being efficient on the stretch.
Yes, so managing liquidity, as we saw yesterday, yields on Treasury seem to inch up slightly because the primary market is a little bit quiet from the side of the financial regulator. So you think, and then because of liquidity, investors, dealers are beginning to price treasuries around to balance their books, as it were. Are you guys closing books, as it were, for the first 6 months? And if that is yes, what's the outlook for July?
For July, when there's a direction, we want to believe markets will be more active in the first instance. We expect a more active market on the short and the long-term end. The promissory notes, which are like borrowings or extensions of borrowings at zero coupon to the federal government, are a major game changer. And then the Monetary Policy Committee's pronouncement that they would want banks to play a reduced activity level, to reduce activity level at the OMO issuers or T-bills end of the market and concentrate more on credit creation and credit risk management is also something to watch. So we expect a lot of activities on the fixed income space, the short end, and then the bonds end when we have a cabinet and then we see direction by way of fiscal policy going forward.
So until then, you dealers is just going to be trading the papers left to right and all of that, hoping that something will come big from the fiscal side that will catalyze things, technically speaking. It's still going to be quiet starting on Monday.
On Monday, we expect federal allocations, and then we expect 351 billion also from bonds auction, bonds maturity. 2019 bond is maturing.
That's going to be almost 1 trillion. That's going to be almost 1 trillion naira.
We're expecting nothing less than 700 billion coming in next week. This is expected to, bring some activity into the market going forward. So we expect a liquid market, and the central bank is supposed to expected to react to that by issuing OMO bills to mop up excess liquidity.
You can bet.
So that we don't start seeing pressure on the FX side.
You can be sure. Godwin, Emefiele, and the rest of his team are waiting for you folks on Monday. You better be prepared. I'm sure you're always prepared for that. On Monday, you're going to have the FX debiting, and then, of course, there's likely going to be at least one open PMA auction to try and mop up liquidity before you guys get a bit too happy with so much money. You have so much money around, everybody's happy. Yeah?
Oh, yes.
There's enough money. Yeah. Macaulay, thank you so much. Have a great day.
Thank you very much.
And see you sometime in the new week starting July. It's going to be quite an interesting month for everyone. That's starting your second half of the year. If you didn't do so well in the first half, this is your second half. President Buhari yesterday receiving the AFCFTA report, says it's going to be a prompt review, but he believes this has to be in the best interest of Nigeria and Africa. But he also said on his Twitter handle, quote, the AFCFTA we aspire to have should therefore not only create wealth for investors, but also jobs and prosperity for our vibrant and hardworking citizens. The benefits of economic growth must be prosperity for the masses. That's what President Buhari says yesterday. That gives you an idea of his mindset about the AFCFTA, which some folks say is going to put pen to paper in the new month. No date's been fixed for that. Meantime, the president went to say that trade is important for us as a nation. Economic progress is what makes the world go round. Our position, Nigeria's position, is very simple. We support free trade as long as it is fair and conducted on an equitable basis. We also told you about a new report by PwC, which says Nigeria is sitting on estimated $900 billion dead capital. That means that we have real estate, high-profile real estate, including agricultural estates, of which we are not benefiting from. So, PwC folks believe that we need to unlock this $900 billion to rev up our economic activities and stimulate growth. But of course, it's going to be a lot coming through next week. Yesterday, the SEC told you folks who are shareholders in the former Skybank that your dividends are safe and give you the name of Cardinal Stone registrars to contact if you want to claim your dividend in Skybank PLC, former Skybank PLC. Okay, let's leave it there for today. Everyone, lay back, enjoy your weekend, and let's come back tomorrow, all eyes peeled, and getting ready for the second half of your business world. Monday, 1st of July, bright and early. I'll see you then.